So good afternoon, everyone. Today, I would like to discuss an exciting topic that combines the power of technology and financial analysis using ChatGPT and Bard. In this presentation, we will explore how these tools can assist us in identifying potential investment opportunities, specifically focusing on the renewable energy sector. Moving on to the next slide. To start off, we reach out to Bard, our reliable source of material and data. We asked it basically to analyze the equity research from top investment bank analysts and determine the best sector for long-term investments. After careful analysis, Bard recommended that renewable energy sector as the most promising option. Now, with this information, we wanted to narrow down our choices and find the most lucrative investment opportunities within the renewable energy field. We sought Bard's advice on which players in the market had the greatest potential for growth, and Bard provided us with valuable insights and presented us with several options. After considering various factors such as market share, financial stability, and growth potential, we ultimately chose NextEra Energy as our top pick. This decision was based on NextEra Energy's impressive market presence, accounting for nearly 25% of the total renewable energy market. Moving on to the next slide, we can see that NextEra Energy is a company that has demonstrated consistent growth and innovation in the renewable energy space. Their commitment to clean and sustainable energy solutions align perfectly. But iniziamo. Aspetta. Okay. So NextEra Energy is a company that has demonstrated consistent growth and innovation in the renewable energy space. Their commitment to clean energy solutions align perfectly with our long-term investment goals. By investing in NextEra Energy, we not only anticipate financial returns, but also contribute to a greener future. Now, let's go into the methodology. We employed to make this selection ChatGPT, an advanced coding technology that played a crucial role in the analysis process. It assists us in analyzing vast amounts of data, market trend, and company financials that enable us also to make well-informed decisions based on reliable data. Using this platform, we were able also to identify key indicators and factors that contributed to NextEra Energy's strong position in the market. And this technology also provided us with a comprehensive understanding of the company's past performance, future growth prospects, and potential risks. And with this knowledge, we were able also to make an informed and confident investment decision. In conclusion, stock picking using Bard has proven to be a powerful combination for identifying potential investment opportunities. By leveraging these advanced tools, we were able also to identify the renewable energy sector as the best long-term investment option. Further analysis using both ChatGPT and Bard allowed us to zero in on NextEra Energy, a leader in the renewable energy field with a significant market share. As we move forward, we are excited about the potential returns that this investment could generate, both financially and environmentally speaking. Our decision to invest in this company aligns with our commitment to sustainable investing, contributing into a cleaner and greener future. Using Bard, we basically, as you can see from the slide, we basically analyze also the business model of our company, which is basically headquartered in Juno Beach, Florida, through two segments, which are the Florida Power and Light Company that provide electricity to the entire state of Florida. NextEra Energy Resources as well, which is a competitive company that develops clean energy projects, and its portfolio is pretty diverse, comprehending a variety of power plants, both wind and solar. Also, its business model is important to underline that is based on several principles, such as focus on clean energy, investing in long-term assets, obviously because it aims to improve the future of the planet, operate in an efficient way by cutting the cost, and also growing through acquisition by having a major impact on the market. Going to the next slide, we can see that NextEra Energy basically was founded in 1925. It operates mainly in Northern America. It's a public type of company. and it has nearly 15,000 employees. Going to the next slide. We asked Bard about the sentiments online towards this company, and basically we found out that NextEra Energy is considered to be a great company with huge opportunities in the future, since it operates in a field that has huge growth trends, or especially during this decade, through major investments done not only by investors but also by the governments themselves. Especially also it has great reviews by its public due to obviously its record, and it's also thanks to its principles, which aims to help to clean up the environment. Thanks to Bart, we also underline the governance structure and the top management, which is basically pretty important, since a company's top management is responsible in the decision-making process, and to also affect in a positive way, I would say, the company's long-term success, because investors want to make sure that the company is being managed in an efficient way. In the case of NextEra Energy, the company has a strong management team with a huge history of success. The CEO is Jim Robo, that has been in the company for over 30 years and has a great record of leading the company in a successful way, I would say, through periods of growth and change. Regarding the governance, generally speaking, NextEra has strong corporate governance practices in place. It has a board of directors that is made up of independent directors that are not related to the company, and they are also responsible for overseeing the company's management, ensuring that the company is operating in the best way possible. To Bart, basically, we also shared some information about NextEra Energy's ownership, which is basically a public one, because it's a public traded company, which means that its shares are traded on stock exchanges. Another role that is pretty important is represented by the top institutional investors that, as you can see from the graph, there were many as of March 2023, and also we have an insider type of ownership, which refers to the share of the company that are owned by its directors and officers. I will leave the floor to my next colleague for the part of stock analysis.
Yeah. Okay, going on, we try to study using both the stock price and in particular the closing price at the 8th of July 2023. This is a really useful tool from BAD, because you can access real-time market data just texting on the platform. And as we can see from this slide, we text and we ask BAD regarding the closing price that was in the day, the 8th of July 2023, $72 with a market cap of $147 billion. And also from BAD, we received an indication regarding the PSUI of $21.44. And then we saw also another important, really specific information, not so easy to know in a normal condition without BAD, the range of trading during the day from $73 to $75. And this is a really good indication, and was super useful to going on, because from this point we asked BAD some information regarding the technical analysis and the study of the graph, some patterns. And we asked BARD regarding support resistance, that is quite important for the day-by-day trading. And the answer was quite interesting, because as we can see from this slide, the support was $73.94 and the resistance was 74 plus $75. And the support level is, I mean, just an indication that the buyers are likely to step and prevent the stock from falling further. This is important for day-by-day trading, but also it's a sort of starting point for the growth in the future. And then we asked also about regarding the reasons behind this pattern and this support. We simply identify three important steps: the company fundamentals, the overall market condition, and investment sentiment, as we saw before with my colleague, captured by the Twitter engagement rate. And this is just a visualization of the support and and resistance from the graph. This is a graph from Yahoo Finance, but we extracted this data from BAD. And as we can see, it's quite clear the support there at $73, and we can see the resistance here at $75. Okay, and now I'm leaving the floor to my colleague.
Here we have a comparison between the NextEra Energy stock price and the biggest ETF in renewable energy. Indeed, we have asked to BARD to compare the past 15 years of NextEra with ICLN and QCLN and TAN. It provides us this chart. What we can see is that 5-year return of NextEra Energy and also 10-year return of NextEra Energy is the highest in comparison to the other. And on the right, we have a graph that show us that NextEra Energy's performance is the one with the most consistent growth. To continue our stock analysis, we asked to BARD to give us the fluctuations in the returns of NextEra Energy and SP500, USD Euro, USD JPY. Over the period from June 19, 2008 to June 19, 2023. Give us starting value, ending value, total return, and analyze return for NextEra, SP500, USD Euro, and USD JPY. To continue our stock analysis, we have asked to BARD to give us the fluctuations in the returns of NextEra Energy, SP500, USD Euro, USD JPY over the period from June 19, 2008 to June 19, 2023. What we have obtained is the starting value, ending value, total return, and analyze the return for NextEra Energy and for other index. And what we can see is that all four assets have experienced a significant growth over the past 15 years. But the returns have been uneven, with NextEra Energy and SP500 delivering the strongest return, while USD Euro has delivered the returns. And we can see these also in the graph on the right that we have obtained using Python with the support of ChatGPT. Now we have a comparison between NextEra Energy historical trends and SP500 and USD Euro, USD JPY. We have a comparison in historical trends. In fact, the graph on the right show us a positive correlation between SP500 and NextEra Energy, and it confirms as what we have observed before. We have asked to BARD why using the moving average to evaluate the performance of a stock. The main topics of moving average are three, and they are the first, smooth out price data. Moving averages smooth out price data by taking the average of a set of prices over a specified period of time. This can help to identify trends in the price of stock that might not be visible if you are just looking at the raw price data. Identify support or resistance levels. Moving averages can also be used to identify support or resistance levels. Support levels are prices where buyers are likely to step in and prevent the price of a stock from falling further. Resistance levels are prices where sellers are likely to step in and prevent the price of a stock from rising further. And the last is identify entry and exit points. Moving averages can also be used to identify entry and exit points for trading stocks. For example, you might buy a stock when the price crosses above a moving average and sell the stock when the price crosses below a moving average. In the following slide, we have free graphs obtained with Python, always with the support of ChatGPT. The first graph on the left show us the historical closing prices of NextEra Energy stock over the 15 years. And the x-axis represents the dates, and the y-axis represents the closing prices time. We can see that the most noticeable fluctuations occur from 2020 onward, but we can explain these as a cause of the shocks of the last few years, the pandemic and the war in Ukraine, especially the latter of which shook the energy sector severely. On the right, we have other graphs. On the top, 50-day moving average, down 200-day moving average. Especially useful is the chart of the 200-day moving average, which make us realize that actually over a larger time sample, the fluctuations are not very noticeable, but rather the stock price as a fairly constant trend. Now I leave the floor to my colleague.
As we can see from this graph, NextEra Energy has constantly increased its adjusted dividend per share over the past 17 years. 2022, the company adjusted dividend per share increased by 70.5% from the previous year. And we obtained this information from BARD. We asked BARD to show us the EPS dividend per share from 2006 to 2022. And this growth is quite in line with the company long-term goal of increasing the adjusted dividend per share by almost 10% year over year. And NextEra is well established and financial strong company with a long history of dividend growth. The company RDS per share has increased for 26 consecutive years. This is quite an important record in the renewable energy sector. And the total dividend payout ratio is now from 2006 to 2021 increased by a 9.8 CAGR, with an increasing of 60% in the payout ratio. This is quite incredible. Moving on, we also asked BARD to show us the adjusted earnings per share from 2006 to 2022, the same time period that we beat from destruction from BARD. NextEra has also a strong growth for its IE per share of the last 70 years. In 2022, also the company increased this value by 4.4% from the 2021, and this growth is in line also in this range for the earnings per share that is in a range between 6 and 8% per year. And the reasons behind this growth are, I mean, the same for the previous slide, and also we obtained this indication from BARD that shows also the CAGR for this indicator that is quite specific for stock valuation. And the CAGR from 2006 to 2022 was 8.5%. Going on, we try to build a sort of backtest trading strategy based on the help from BARD and also ChatGPT. And we asked this software to show us the historical return of a buy and hold strategy for NextEra Energy based on the last 15 years. According to BARD research, with this type of strategy, with the initial investments of $10,000 in 2028, 15 years ago, now this investment will be worth of $73,000 by the end of 2022, and this is a compounding annual return of 18% per year. That is quite crazy. And of course, past performance is not an indication for future results, but we are quite sure that the stock, based on three main factors that we extracted from BARD indication, will be very, very important growth in the future, and also will be continuing to growth in the long term run. We also identify with the help of BARD three main indicator for the future growth: the global transition to clean energy, the growth of US general economy, and also the company's strong financial performance that we study later in some specific slide. But of course, starting from the first point, NextEra is a leading clean energy with a market cap of almost $10 billion, and this is the market leader in the renewable energy with 25% of the total market share. And this is very well positioned to benefit from the global transition to green energy. In particular, after the war in Ukraine, the company has also a large portfolio of renewable projects that will be built in the future, and is also investing a lot of money, a lot of revenue in the new technology, such as, for example, energy storage. I mean, it is a fundamental part of, for example, green market of cars. And then going on, we have the growth of the US general economy that is expected to continue growth in the coming year. They are trying to recover the pre-trade level of the economy as before the 19 pandemic. Last but not least, the track record of financial performance from the firm that are super strong, in particular in the higher earning per share and dividends, and also with a very, very low level of debt to equity ratio. The financial strength of the company and also the flexibility to invest in opportunity, I mean, would be the starting point of a really, really strong growth in the future. Now, we will going on with the free statement analysis of the firm. We started this process with a prompt for Bud. We simply ask Bud to provide us with the free statement analysis of NextEra Energy, but with the simple specification, data from Yahoo Finance, that is one of the most accredited provider of data for the financial market. Starting from the income statement, as we can see from this table, we have now $24 billion in revenue. That is 4 billion of surplus compared to 2018. And the level of the revenue is quite high, also compared to the pre-COVID-19 crisis. And this value is also the same for the net income, from 5 billion in 2018 to 6.6 billion of dollar in 2022. And also the earning per share from $2.10 per share in 2018 to 3.37 now in 2022. It's quite important to study this value because it's an important starting point for the future growth of the firm, with really solid base in the free statement, and in particular in the income one. It's a quite good sign of future growth. Now, going on, we are studying the balance sheet, and as we can see, we have an increase in the total assets from 106 in 2018 to 129 in 2022, and also in the liability side we have a huge increase, but it is due to the huge investments that the firm is investing to follow the trend, to search for new interesting project in the renewable field, and also they are investing a lot of money from that and not also from equity. And going on, the cash flow statement, it's quite important to have information regarding this part, because from the cash flow statement we can have an idea of how the company is making money. Are they making enough money? You can see from this table the operating cash flow has grown at a CAGR of 5.5% from 2018 to 2021, and this growth is driven by the company increasing in revenue, and also its strategy to try to control costs and cut costs. And then going on with the free cash flow, as we can see from this table, they have an CAGR of 5.6% over the past 5 years, and this growth has also have been driven by the company increasing in operating cash flow, as we said it before, and also in its ability to control the capex. And now I will leave the floor to my colleague.
Here, with the support of Bard, we have obtained an analysis of the last 5 years of PB and ROI of NextEra Energy, using data from Yahoo Finance. As we can see, NextEra Energy's PB ratio has been relatively stable over the past 5 years, ranging from 2.69 to 3.50. Its ROI, on the other hand, has been steadily increasing from 10.3% in 2018 to 11.77% in 2022. This suggests that NextEra Energy is a well-managed company that is generating a high return on its shareholders' equity. A low PB ratio indicates that a stock is undervalued relative to its book value. High ROI indicates that a company is profitable and is effectively using its assets to generate returns. Now we can go to analyze PE. Here, with the support of BARD, we have obtained a comparison between PE for NextEra Energy and the main competitors that are Duke Energy, Exelon, American Electric Power, and Equity Corporation. As we can see, NextEra Energy has the highest P ratio of the 5 companies. This means that investors are paying more for each dollar of earnings that NextEra Energy generates. However, NextEra Energy also has the highest ROI of the 5 companies, which means that is generating higher return on its shareholders' equity. Whether or not NextEra Energy is a good investment depends on your individual investment goals, risk tolerance. If you're looking for a company with high growth potential, NextEra Energy is the right option for you. Some additional factors to consider when comparing NextEra Energy to its competitors: dividend yield, debt to equity ratio, and financial strength. Now I leave the floor for valuation to my colleague.
Now we are studying the valuation part that before my colleague has explained really careful. We asked another one but to compare the P/E ratio of NextEra Energy and the main peers, the main competitors. And we obtained this answer from BARD that the P/E ratio is slightly below the average of the peers of the company, and this is a suggestion that the market is pricing NextEra Energy as a slightly undervalued stock. It is important to know that the P/E ratio can vary depending of a huge number of factors, such as the company growth prospectus and of course its financial strength. Investors should do their own research before making an investment decision. And also BAD provide us with additional detail about the P/E ratio of NextEra Energy compared to the main peers. We had that NextEra is of course leading clean energy company with a strong track record of financial performance, and also compared to the main peers, Duke, one of the competitor, is another leading clean energy company. But for example, we have many important difference. For example, they are investing less money compared to NextEra Energy. For example, in a new field of the renewable energy sector. In that way, NextEra is building is competitive advantage for the future. They are trying to win a larger part of the total market share in the renewable energy, and this is the same story in the comparison between NextEra and the other 3 main competitors. To sum up, NextEra is a well-managed company with a strong track record of financial performance, and this strong record is clearly represented in the P/E value. That is quite undervalued compared to the peers, and the company is also well positioned to benefit from the global transition with its important investment in the field. And this is really important when we are talking about the possibility to invest in a firm based on the P/E. And then going on with the valuation part, we also asked BARD to give us the main pairs P/E value from the past 15 years, and the story is quite the same. Starting from 2008, we can see that, of course, NextEra was quite undervalued compared to the peers, and the story is the same in 2023. The expected value, the projections, we have 21.4 for NextEra compared to the 21.6 for the free. We have 21.5 for NextEra. That is the second lowest value in this ranking. As we can see from this slide, the NextEra had a very lower P/E ratio in the past 15 years compared to the peers, and this is a strong financial performance indicator, and is also a really important commitment to the clean energy that make this stock very attractive for the investors. Little disclaimer: it is important to know that past results are not 100% attainable for the future. Going on with the pure valuation part, we're starting from this data that we studied before, and we ask another one time bar to provide us with a fair value of the stock based on the pairs and also on the P-sui. I mean, we try to calculate the fair value of the stock based on the value of the competitor, and this is a clear example of a relative valuation based model. As we can see from this table in the right hand side, we started from 22.14, that is the medium value of the P-sui for the main competitors, and then we extracted with the help of BAD from the Yahoo Finance the earning per share at the end of the fiscal year 2022, that was equal to 2.9, as we can see from this part, and then we simply multiply this value for the 2022 multiple, and we obtain a fair value of $76.73, and this is a really important fair value. And then going on, we have the final part of the strength and challenges, and I'm leaving the floor to my colleague for the conclusion.
So regarding the risk factors, we asked Bart, what are the biggest challenges that the NextEra can face? So we found several elements, such as the economic slowdown that might be due to obviously a recession, and this could cause a lower demand for energy, which could hurt the company financial performance. Obviously, increased competition due to the fact that the clean energy industry has become, not only recently, but it's going to become even more in the future, more competitive due to more pressure done by nations' governments. Changes in government policy, obviously, that might diminish, for example, the efficiency in policy making decisions. Obviously, natural disasters such as hurricanes, in this case, since the company is based in Florida, or technical issues such as power outages or cyber attacks that might disrupt NextEra Energy's operations. Moving on, we can see also that there are many growth factors, such as the global transition to clean energy, due to the fact that the world is becoming more conscious about how important it is to invest in this type of energy. And obviously, the company is a leading player in this area. Obviously, also the growth of the US economy, which is expected to grow even more in the coming years, which could lead also, due to demographic increase, to higher demand for energy in this case. And NextEra Energy might be ready for this huge high demand. The company's strong financial performance also, which due to the strong track record, and due especially to its high earnings and dividends, and also to the company's commitment to shareholder value, due to the fact that it has a strong history of returning capital to shareholders through, for example, share repurchases or dividends.
Now the last part of our work is based on the coding resources. We want to calculate the return on NextEra Energy. To calculate this, we downloaded the closing price time series from Yahoo Finance on Python. We have obtained the code through ChatGPT support. The final results, as we can see, confirm the good returns. This programming work has been greatly simplified thanks to ChatGPT's advice.
So in conclusion, stock picking using ChatGPT and BART has proven to be a powerful combination for identifying potential investment opportunities. By leveraging these advanced tools, we were able to identify the renewable energy sector as the best long-term investment option. Further analysis using these platforms, such as ChatGPT and BART, allowed us to zero in on NextEra Energy, that is a leader in the renewable energy field with a significant market share. So our decision to invest in this company aligns with our commitment to sustainable investment, contributing to a cleaner and greener future. So thank you for your attention, and we are happy to answer to any questions you may have.